Hello everyone, and welcome back to the Yield Curve Trader channel, your daily source for macroeconomics, markets, and global financial insights. Today's major headlines. The IMF warns of a global slowdown, driven by rising geopolitical tensions. Oil markets turn volatile again, with prices pushing back toward the $100 level. And U.S. economic data shows signs of weakness, as GDP is revised down, and personal income declines. Let's get started. Starting with the first headline. The International Monetary Fund is warning that rising geopolitical tensions could trigger a global economic slowdown. This is important. Conflicts don't just stay political. They hit the economy directly. Trade gets disrupted, energy and food prices rise, businesses delay investment, and consumers become more cautious. The message from the IMF is clear. Global growth could weaken in the coming months, especially if tensions continue. For markets, this means one thing: more caution. Investors may rotate toward safer assets, like bonds and gold. Now let's move to oil. Oil prices have surged back toward the $100 level after a sharp drop earlier in the week. This creates a classic V-shaped recovery. What's driving this move? Growing doubts about the durability of the ceasefire and rising geopolitical risks. And this matters more than you might think, because oil feeds directly into inflation. Higher oil prices mean higher costs across the entire economy: transportation, production, and ultimately, consumer prices. If oil stays elevated, inflation could remain sticky, and that makes it harder for central banks to cut interest rates. Now let's look at the U.S. economy. We're starting to see signs of slowing momentum. Final GDP for Q4 2025 has been revised down to just 0.5%, and personal income declined in February. That's a warning signal, because the U.S. economy depends heavily on the consumer. If income slows, spending may follow. Now combine that with rising oil prices. You get a difficult environment. Growth is slowing, but inflation is still present. That's what we call stagflation risk, and markets do not like that. So how did markets react today? The overall tone was cautious optimism. Stocks moved higher, but without strong conviction. The S&P 500 gained about 0.6%. The Nasdaq led the move, up around 0.8%, helped by strong performance in big tech, including a sharp rise in Amazon. The Dow Jones also climbed 0.6%, and small caps, represented by the Russell 2000, moved higher as well. This tells us the rally was broad, but measured. Investors are participating, but they're not fully confident. What's driving this? On one side, optimism around a fragile ceasefire and possible diplomatic progress. On the other, persistent inflation concerns, reinforced by recent data. Now let's talk about commodities. This is where most of the volatility happened. Oil surged nearly 7%, reclaiming the $100 level, a sharp reversal after earlier losses this week. The driver is clear: geopolitical uncertainty and doubts about the ceasefire. Meanwhile, gold moved lower, down about 0.9%, as some investors rotated back into equities. Silver also declined, falling more sharply. But here's the key insight: gold is still near record highs, which tells us that long-term concerns, inflation, and global risk are still very much present. Looking ahead to tomorrow, this is where things get critical. All eyes are on the March CPI inflation report. This is the next major catalyst for markets. Here's the setup. Growth is already slowing. GDP is weak, and income is declining. At the same time, oil prices are rising again. That creates a potential stagflation scenario. So here's what to watch. If inflation comes in above 3.4%, markets could react negatively. The Federal Reserve may be forced to keep interest rates higher for longer, and that would likely put pressure on growth stocks, semiconductors, and high-valuation tech. On the other hand, if inflation comes in lower than expected, markets could extend this rally. So the bottom line is simple. Right now, the market is in a wait-and-see mode, balancing between geopolitical relief and economic reality. And tomorrow's data could define the next major move. Thank you for watching. If you found this video helpful, make sure to like, subscribe, and share it with others' interest.